Hello, everybody. Welcome to this week's edition of Vishal and Company. We have a ton to get to today, and it's a full house. Joseph is with us again in the ether, just his voice. We're going to be covering trading in an inflationary period, fear in the markets, and if it is being driven by the Fed or geopolitics or both. And lastly, our friend Galen's favorite company, we are going to be looking at Tesla under the microscope. I am just going to pass it over to Vishal so we can get started.
Awesome. Thank you, Maddie. So another, wild week here on Wall Street. If you've seen our newsletter, and also, I guess, if you've seen the market moment as well, I've hinted at a possible head and shoulder pattern here on the weekly charts. So again, you have your left shoulder here, you have your long protruding head, and we may be building our right shoulder here. And why is this important? Because the last time we've had this pattern on the weekly chart of the S&P 500, and also I believe on the NASDAQ, it's there as well, although it looks a bit dirty. But even here on the Dow Jones, believe it or not, was actually way back in, there she is, 2007. So, we've had this pattern before, and we all know what happened in 2007, the GFC, the Great Financial Crisis. So, another one of those things where I love the technicals because it can sort of indicate the emotions, and I guess you could even call imperfect information, right? Where people who maybe know things that might be coming along might be getting their positions ready just because they want to get out, right? So I think it's important to keep that in mind as we go forward. On the weekly charts, there is this large, broader reversal that is setting up. And right now, as we're speaking, we still have these lows that we made back in the last week of January that we did, or we are sort of retesting now. There was a bit of a drop today, and this morning was actually quite a wild day. I'm in this sort of group that trades, and someone put a video of like this explosion in Donetsk, and it turned out it was a car. Some person took a car in front of the government building and blew it up in Donetsk. But basically, if you're a soccer or football fan, there's a team there called Shakhtar Donetsk that hasn't been in the Champions League and hasn't been able to play in their home stadium since I think like 2014, because there's been this proxy war in that region between Russian mercenaries and the Ukrainian army. So apparently today, they said that, hey, the Ukrainians are about to invade. Let's run to Rostov. And again, this area.
You mean the Russians?
No, the Ukrainians, because this area is actually fully.
Oh, I'm sorry. Okay, gotcha.
Yeah, it's like a separatist, because they're all Russian that live there on the eastern part of Donbass, Donetsk, and Luhansk, and I think even Kharkiv. So it's all primarily 95% Russians who live there, and basically they're saying, okay, we're running off to Rostov Oblast, which is like a border city in Russia. So apparently 2 million people are leaving. And yeah, markets got a bit spooked here. What I've been watching though, specifically for geopolitics, and I think you guys sort of know this, is literally the chart of oil, right? This is, I think, the most important one. And right now, the chart was red. We have now flipped green for the day after this news about things happening over in Russia and Ukraine. But as long as the oil chart drifts downwards, I'm not really too worried about the geopolitics, and I think it's because the markets aren't really worried about geopolitics. But when you get something green like this, then it's something to be afraid of, I think, or be wary of. And there's one other thing we have to talk about. That is, of course, our good old gold touched 1900. And a lot of people are talking about a new breakout here in gold, and we've actually come and touched, my resistance zone here. So I'm not getting too excited just yet, but I do think longer term, gold is where you want to be, not just because of the geopolitical stuff, but with the Federal Reserve. And I think that's sort of what we have to talk about here, because big debate on whether markets are dropping because of geopolitics and this fear. Or is it because of the Federal Reserve? And of course, if we look at the FOMC, you can see here in March, or March 16th, there's a 100% chance of a rate hike. 78.9% of the market believes it'll only be 25 basis points. but we're picking up now where 21% of market participants believe that the Fed will actually do a 50 basis point rate hike here. So that's the big debate here. And it sort of got a bit crazy because yesterday, Fed President Bullard, who actually, believe it or not, he actually caused a decent amount of this sell-off a few weeks ago because he came out saying, hey, look, inflation is getting out of hand here. We have to hike rates really, really quickly, 7 times, and we have to be at 1% interest rates, or we have to hike by 1% by the end of July. And then from there, we can decide what we want to do. And I mean, look at some of these words he's been saying, right? The Fed's credibility is on the line, and, advocating for a rapid interest rate hike to counter basically inflation, right? We have to front load more for planned removal of accommodation than we would have previously thought. We've been surprised to the upside on inflation. This is a lot of inflation. Our credibility is on the line here, and we do have to react to the data.
They absolutely do. We had a comment from a viewer on our YouTube channel that had watched our last week's show and said, you know what, interest rates should have gone up in December of 2020. And they're right.
Yeah.
We're playing catch up, and he said, as the weapons that they have, or the tools, if you want to take a non-confrontational term, that they have to combat inflation, have to come out and hammer hard. Because otherwise it's, as that meme on Wall Street Silver was, it's like Tom Hanks standing off a tank with a handgun. It's not going to work.
Yeah. And before we just move on to, I know TK has a lot to talk about here on inflation, because I think this is going to be a really interesting show where we have someone who's seen, the effects of hyperinflation in real life. But U.S. retail sales actually surged 3.8%. The economists are saying, oh, this is great. This is because, it's a strong economy.
No, however, people are stocking up to get through what they figure is going to be a shit time.
Exactly. So a lot of people are saying people are now beginning to stack up and purchase things because they know inflation is going to be going out of control. So, when you get to hyperinflation, that's when people start using their money and spending their money right away because they know tomorrow prices are going to be higher. So keep an eye out on this, on retail sales and how people, spend their money, because if this keeps jumping, that will add to the money velocity, which again, when you're in a hyperinflationary period, money velocity is out of control because people just want to get rid of the cash right away. And, I had a story, my economics professor back in 2012, he went to Argentina, and, Argentina is also a country that's known for crazy monetary moves, right? They had high inflation. So he was saying, I was eating dinner, and basically every 5 minutes, the waitress had to come to update our bill because basically prices were changing in a flux. So, you're either eating really quickly because you want to pay really cheap, or, you're going to wait a little bit and
hopefully it goes down.
Get a cheaper bill. But I think, Mr. TK here can maybe tell us about what the heck do you do in an inflationary period?
Awesome. That's actually one of the biggest things a lot of people think about. And this is not only like big institutional investors, it's just you and I kind of go over how do you actually prepare for this? And inflation in itself.
I'm rich, TK, I'm rich.
It's basically, I think it's like 0.000 something USD. So you're pretty rich. And a lot of people have kind of, tried to study how to predict currency crises, because that's what majority of what's happening here. So I was like, you know what, let me kind of go through the thinking process that I went through when I was making acquisitions in 2017. And after doing this made me realize some stuff as well. And I was like, oh, hopefully people would like that I'm sharing some of this stuff that I found through. So I'll kind of go through what a currency crisis is and how it's formed, touch on the ZIM inflation that Vishal alluded to, and then kind of go through what the general investing or the general trades you can do during an inflationary period that most people kind of look past. And to start off with, you kind of have to look at what the ideal currency regime is. So each country kind of has to have a set standard of rules that it follows for the currency to work. So, you could have a fixed rate, floating rate, etc. But when we look at it, we have an ideal currency regime. So basically, the first of these things is the exchange rate between, two currencies should be credibly fixed.
Stable money, you're basically saying.
Stable money. Basically what the Fed is talking about, right?
And we still have situations like this in Hong Kong where the dollar is fixed. And I believe in like parts of the Middle East, like Brunei, I believe their currency is fixed. So there are these regimes, where it's a fixed currency. And I'm a big fan because it's so similar to how the gold standard used to work back in the day. So
That's true. I think, the biggest one I do know, like you said, is the Hong Kong USD one. That's still pretty fixed. They don't have as much fluctuations as the RMB. And majority of this, fixed rates, what it does is it takes out the uncertainty of price fluctuations.
Exactly.
So you see prices in your financial assets or your real assets or your prices of goods and services won't fluctuate as much as they do in that kind of regime. So if you compare what we had in Zim, where we were pegged to the USD, we were pegged, but in essence, we were still a floating currency. Because we didn't have the reserves to match.
So I was just going to ask you that. So the country needs the reserves in order to maintain that peg. The bank will have to either sell dollars to buy their currency to prop it up, or do the opposite, right?
Exactly, and that's kind of where the issue starts slowly showing itself. So people are like, okay, if that's not covered, at least have a currency that's easily convertible, which is, not to bring him up, he's in old news, but Trump was kind of bashing China about this, where China restricts capital inflows. So it has a control of how exchangeable its currency is, etc. So it's kind of still in the same regime, but it's not really, it's a little more free floating, I think, since 2018, I might be wrong, 2018.
They have like an offshore yuan, so that's for like currency people to trade, and then they have their own domestic yuan, but the people's bank is in there playing both.
Exactly, and we had the same situation where we had the dark market rate, and then the bank's interbank rate as well, the Federal Reserve, our central bank's reserve rate as well. With that, each country is trying to independently pursue its domestic goals from monetary policy. That is the goal of having a currency in a country. So those are the three things that ideally the Reserve Bank or the central banks are trying to have, ideally. But we know from all cases around that there is no regime like this. You can't have all three prongs matched. You're going to have a trade-off between some of the others. But I won't go too much into that, but there's many studies that just kind of show, just have a fixed, a free floating rate and allow the market to dictate what that does. But the essence of this is that each country is trying to kind of control the fluctuation of the currency, at the same time allowing productivity in the economy to continue to roll on without the inflation going to a certain extreme. This is what leads most economists like Ray Dalio to talk about what actually causes a currency crisis and what that is. So majority of what that is the cash inflows. So the capital inflows in the economy just suddenly stop. And then the economy can experience a financial crisis or a banking crisis because of the credit squeeze. And generally with that, the economy also contracts, and value of assets, financial and real assets, kind of also plummet. And this is hand in hand with the banking crisis in 2008. It's just capital inflows just suddenly, just out of nowhere, just stop. And the reason most economists can't predict this is because the reaction of the market is pretty quick. So it's not something you can anticipate, although there are weaknesses in the economy that you can look at that kind of show you leading indicators of this kind of happening. So in Zimbabwe, the same thing happened, where the inflation rate in 2008 was rolling on every month, 25%. And then eventually it started to balloon to 35, 50 etc. And the price of the reserve to combat that, instead of the usual techniques, they just started printing more higher denominated bills because they couldn't curtail the credibility that they had actually acquired over time. So a lot of what they did is just they continued to print, and that was because the population lost confidence in them, in the value of the currency. And this is different from what happened in 2018, where people anticipate inflation now. So we've kind of gone through the same situation, except now manufacturers and producers were pricing their products based on what they expected inflation to be, which then kind of would be pushed into the price that they charge for their services. That's slow inflation that's kind of happening in the US, where if you look at a lot of companies, they're saying, yeah, we're feeling pressures on our profits. And the only way to curtail that pressure is either increase prices or increase volume. It's generally easier for the company to increase prices than it is to increase business. So one of the examples that's in the US is Netflix recently increased prices, and they experienced some volume decrease, but sales are still pretty stable. So that's kind of the relationship there. In Zimbabwe, the issue was people are non-banked. So they purchase more with cash than they do banking. So the government couldn't actually really regulate how much of the cash was going in and out. So instead, what they did was they switched off the stock market for 2 years. So you can imagine in 2018, inflation is about normal, 20%. And then a few months later, you're starting to see inflation numbers come in at 100%, 200%. And the central bank asked the exchanges to close off the market. So there was a dark period for almost 2 years. Luckily, I had bought a year before that. But there was a dark period for 2 years where you couldn't buy anything. The only thing you could use to price was the actual cold hard assets. So you could still check gold, because Zim is rich in gold, platinum, coal, and diamonds. So you could still check the active prices of those and compare to current prices.
At that time, then, were people using commodities as barter, or were they going into, say, the US dollar?
They were trying to get into the US dollar. Okay. So what you would do is it's kind of a weird situation where our exchange is in US dollars.
Right.
So to buy stocks and stuff in Zim, you had to have USD. So you have to transfer the cash in the dark market outside of the government's eye, and then put it into the accounts. The government realized people were doing that, and shut that off.
Okay.
So people didn't have access to the market anymore. Instead, you had access now just to gold or other commodities that you could trade, mostly paper trades.
Okay. So I bring this up because Turkey might be doing the same thing, right? Where you're hearing Erdogan is now trying to say, okay, don't exchange your lira for dollars. And I think he shut that off as well. And now they're trying to get people or persuade people to bring in their gold to prop the lira. So.
It just made it as a reaction for most people. It kind of makes sense when you can't anticipate what's actually going on, especially for countries like us where we are resource rich.
Yep.
It's also a curse because it's the breeding ground for a lot of corruption as well. So it was a hit or miss. It's either you were holding your cash in your bank account that you saw lose 80% of its value overnight, or you invested in the stock market. And at the time, you were seeing returns from most stocks in the exchange going up at least 100%. What's funny is at the end of 2020, if you had put in $5,000 into just a diversified exchange in Zim and taken it out 3 years later, you would have a 30% compounded return after inflation. So your $5,000 would have turned into close to $11,000 in the 3 year period. But the difficult part was that 2 years of not knowing what's actually going on under the economy.
Yeah.
Which I don't think the US will experience anything like that, a dark period. But the lesson I did take was after I looked at that, some of the companies that did well had kind of the same characteristics. So I was like, oh, you know what? let me think about this more and look at the ones that did succeed. And majority of the time, what helped these companies succeed was their ability to price their competition out of the market. So they could price well, or they could invest in future business without putting on a lot of debt into their books or etc. Basically, they didn't need a lot of capital initially just to run their business. So essentially, I was like, you know what? It seems like the formula here is invest in asset light businesses with purchasing power. And this is just a theory, but there's a slide there I want to show where we actually put this into practice. So I took it's the last one there. So I took just the averages of four industries: the automobiles, IT, banking, and transport or transport infrastructure. If you take the company A there, the auto manufacturer, you have your sales, and the only thing you can do is increase sales or inflation affects you.
Yeah.
On your first line there, that's the last 12 months in the US. The average manufacturer had a gross profit of about 26%. That's the cash after all your cost of producing your first good. If you apply 7% inflation to the cost of goods, which is what most companies will experience before they increase prices, car manufacturers generally, the earnings drop by 43% just from the 7% inflation. If you look at IT services, for example, with 97 margins, earnings drop by only a couple basis points if you increase by 7% inflation. If you look at banks that don't have any cost of service because majority of their services are financial assets, basically mortgages, etc. Their only cost is administration, so the bank tellers, etc. They don't experience anything inflationary wise on their income statement. So earnings don't fluctuate that much, but they do experience interest rate increases that are priced into your deposits and etc. So that's a whole topic in itself. And then the last one is just transportation infrastructure. If you increase the cost of goods by 7%, their earnings drop by 7%, which is not too bad. So essentially, if you look at the four companies, you kind of see a trend. The heavier capital intensive manufacturers, earnings fluctuate quite rapidly because of inflation. With the asset light IT service business, earnings really don't fluctuate because of inflation. With something like banks that have more financial assets than they do real assets, they're not as affected by inflation increases. And more stable infrastructure companies as well, they experience a drop in sales, drop in earnings, but it's not as dramatic as something as a company, an automobile car. And at the beginning of this, I lied to you guys. Actually, the companies are not random. Company A is Tesla. So those are their last 12 months of earnings. Company B is Visa. Company C is RBC. And company D is West Shore Terminals, this terminal in BC here. So he's actually
and you just love that company, eh?
Yeah, I still do. I think it's up like 40%. Okay. But this is just an example of that. The model does work. You can anticipate inflation, but you can invest in businesses that are asset light and have some sort of pricing power.
Yeah.
And that's reflected in the numbers here with the different companies.
So out of these companies here, okay, so Tesla, no dividends, right? So they don't pay dividends. Visa, I believe they do.
They do pay dividends, yeah.
RBC does.
RBC does, and
West Shore does or not?
West Shore does as well.
It does as well. Okay.
Yeah. So I can from this, it's without the names involved, it's pretty easy to tell that others will do better in that period. The stock can do its own thing for a brief period, and that's that 2-year gap that you mustn't care about. That okay, you know what, inflation is going to go up 800%.
Right.
Maybe not in the US, but
hopefully not.
and Canada. But watching that inflation, looking at our commodity prices back home, our spot prices, compared to what I was seeing in the market, was probably the scarier part. When they did switch off the market, anything that happened didn't really matter except what the businesses were doing, the actual quality of the businesses that we had bought. Luckily, in my infinite wisdom, dumb luck, I bought a bank and an IT services company back home. And I think on average, they did like 4,000%. And then if you take off inflation and stuff, you kind of adjust that and you kind of get to a rounder number. so that's kind of how I'm approaching this in the US as well. Just looking for companies that have high pricing power and don't need much capital to do business in the future.
So in that period, you're looking at more of what people would call like the value stock. So for example, Coca-Cola today made record new highs. I mean, it's still selling off right now, but record highs. They pay a divvy because a lot of people are claiming, hey, you know what, you're going to always have to go. Well, I mean, maybe you're not going to always buy Coca-Cola, right? But
that's true.
Coca-Cola is always selling something somewhere in the world, right?
I'm going to backpedal us to the company that wasn't paying dividends.
Yep.
Because we have about 5 minutes left, and I'm going to pass it on to Galen.
Perfect inflation hedge here, Galen.
Yeah, I think the bloom is finally coming off the rose in regards to Tesla. The shoddy manufacturing is now starting to come to a head with all the recalls. The National Highway Transportation and Safety Administration is coming hard after Elon in regards to the quality of the vehicles being put out the door. He's focused from day one, and it's always been part of his vocal mandate is that he's on numbers. Doesn't give a shit. Something happens on the assembly line, fuck it, throw it out the door. Let's make this happen. And that's really coming to bite him in the ass because in the end, a car manufacturer has to put out quality product. I mean, illustrating how bad the cars have done over the last little while, Consumer Reports has again dropped them in their list of dependable vehicles to 23rd place. This isn't a shining example of great engineering and or assembly. It doesn't help also that Elon has been forcing FSD out the door like it's some sort of savior to our transportation prayers because it is not. It is at best a level 2 autonomous driving vehicle, which means you can only allow it to do some things and have to be ready at any one moment to take over the driving of the vehicle. It's been contended, especially by the VW CEO, and you could say this is a bit sort of biased, but I don't think it's biased at all, saying that the FSD will never achieve level 3 autonomy because of the camera aspect, that he's using imagery processing to drive the vehicles forward, whereas LiDAR gives you an actual depth perception and spatial perception of what you're up against, and that's the only thing you can interpret how the vehicle should operate on the road. Now, something to be said about machine learning in terms of how it actually figures things out. If, for instance, when Google put out that photo application that suddenly started identifying people of color as gorillas, there was a huge kickback, and Google spent the next 3 years trying to solve that problem in its algorithms. But with machine learning, the algorithms are so complex. It's entirely, nearly impossible to get to the source of the problem, figure out what that is, and plan forward ahead. Eventually, they just had to deny the program to allow any tagging of chimps, monkeys, gorillas, and whatever else to ensure that problem doesn't happen. But that's not a solution. That's an actual elimination. So Tesla has been slamming into the back of emergency vehicles, trying to run over pedestrians and cyclists, careening towards cement pillars. The company has been not even transparent in regards to its testing of the FSD program. There's no numbers that it's put out, but gradually it's coming to a head. We've got 400,000 vehicles where multiple complaints of shadow braking, which is, incredibly fucking dangerous and not something that I would hinge my investment on. Whereas Elon has been discussing that, we'll just sell FSD to the rest of the guys like he's got something to sell. No. Nearly every manufacturer out there has a better system at this point in time. They're merely waiting for regulatory approval on level 3 driving vehicles, whereas Tesla is still struggling to get past level 2, and Elon's talking like it's level 5, which it is not. That meme that he just put out. I don't care that he's memeing about Hitler. That in and of itself is just a ridiculous aside. But the fact that he's fucking with foreign politics because he's pissed off that the SEC is finally looking into the inner workings of his charlatan operations inside of Tesla is a pure indication of his asininity and his inability to forward any kind of company. You want to talk about SpaceX, which Vishal showed me a little earlier on, that they split their stock. Do you know why they did that, Vishal? Because they fucked up their satellite delivery. They blew up 40 satellites because they couldn't account for a solar storm and had to have their fucking company carried by a billionaire for the next 3 missions. This is not a sign of success. This is a sign of a man that's actually trolled his way into his position and has absolutely no fucking comprehension of the sectors he's involved in or any ability to lead the people in that sector towards any kind of realistic goal. I'm fucking glad that the bloom is coming off the rose. There's so many other companies out there that make EVs. There's so many other companies out there that are doing autonomous driving options. There's so many other companies out there, including fucking NASA, that do space research that should be giving that opportunity. Yes, there are things to be dealt with NASA. The biggest problem was oversight. The fucking supply chain was out of control. But the fact was, if they solved that, there's no fucking problem. They had all the brains. They had all the support. And the academics was a national product. It wasn't the purview of some private fucking establishment. So, fuck you, Elon.
Joseph, we haven't heard your lovely voice. We have about a minute left. Do you have any thought, anything you want to add to all of it?
I would dare say it. I mean, this week for me, it's just been a learning week. I've been sitting here listening to TK going off about inflation. It's like, okay, all right. Yep. All right.
Perfect. Inflation and fuck Elon. I think that's a great conclusion.
Joseph, would you be buying Bitcoin as an inflationary asset?
Probably not.
Oh, okay.
No, I don't think so.
Yeah.
No, that's the long and short of it, really.
Yeah.
I mean, I'm mostly just, I have other problems with Bitcoin, which don't have anything to do with inflation. I don't like how transparent it is. I'm actually starting to move away from Bitcoin towards more privacy-related assets for that reason.
Next week, man, I think we've got to do a Bitcoin and privacy show.
Perfect. We will be back same time next week. I think that's all the time we have. Thank you so much for watching, tuning in, and we'll see you next week.
Bye. You know what I just did? I put through something on another show for some reason. It's yeah, kind of interesting. Hold on. No, that ain't what we're looking for. What the fanny fuck is going on here? Sorry, guys. There's something up. Yep, there's something up with the computer. So we're just going to say goodbye as is. There you go.